Folks, today I want to talk about a secret weapon to help you take advantage in what could be the hottest sector, the online retail sector. Now, before you're probably thinking to yourself, online retail sales? Well, let me tell you something interesting. In the last month and a half, consumer discretionary spending has been heating up. It has been heating up. I'm not exactly sure what that's all about. I'm not sure if people have been saving a lot of money because they've been staying home, not going to restaurants, not taking vacations. But I think it has a lot to do with the fact that interest rates are low and people have been refinancing their homes and taking money out of their homes to spend. Because what happens when people refinance their homes? Most Americans, they're not concerned with the total amount. They're concerned with their payment. So when interest rates go lower, you're able to take the same amount of money or more money out, but have your payments be the same level. So in other words, if you had a $200,000 loan, you can now get a $220,000 loan, but your payments stay the same. So that $20,000, what do people do with it? They reinvest it, they improve their house, they go on vacations, they go shopping, they buy luxury goods, so forth and so forth and so forth. And by the way, there's a statistics, and home sales are hot too, so people are moving into new homes, and statistically, people spend a bulk of their money when they move into a new home. Furniture, a new car, usually within a year or two. Usually people buy new homes when times are good. People don't buy new homes when times are bad for them. So again, I'm just pointing that out. But consumer discretionary spending and retail data has been positive. At first, when the COVID-19 strike or began, consumer spending and all spending just kind of subsided. But what happened was over the last few months, we've seen a trend go from spending brick and mortar to online. So people are spending. Matter of fact, Target came out with numbers, quarter over quarter, 197% increase in online spending. Walmart, 97% quarter to quarter. Brick and mortar, only 15%. And my parents actually, they stopped at our house. It was my youngest daughter's birthday the other day, and they went to Walmart to buy her a gift. And they said the store was very fragmented. There wasn't a lot of supply. And my wife said the same thing, and I'm hearing the same thing. So most people are shopping, but they're doing it on Amazon. They're doing it in Target online. They're doing it on Walmart online. They're still spending the money. They're just not doing it at brick and mortar. But I thought, what's the best way to take advantage? Because we're getting towards the end of the year, it's coming faster, elections are coming. And usually, if retail sales are hot, retail sales are the last sector to report. We usually see a nice end-of-year rally. But I was reluctant to recommend online ETFs because there's a big risk. Because what happens if we have this COVID-19 vaccine comes out, and next thing you know, it's not an issue anymore. We're going to see a really hard and fast dive in online sales and a big spike in brick and mortar. So I wanted to kind of find a way to give you a trade or give you something to help you take advantage of either scenario. And I was doing some research and I found literally what I think is the perfect weapon. I'm really excited about this. Let me show you this. The ticker symbol is CLIX, CLIX, okay? It's ProShares, so it's on the level. This is not some foreign company or anything like this. This is one of the largest US ETF producers or creators. So ProShares created what I like to call CLIX. It's an online long, brick and mortar short. Who would have thought of that, right? I can't imagine something like that being out there, but it is. But here's what I love about it. It has 100% exposure long to online and 50% exposure to short brick and mortar, which is really, really great because take a look at the constituents. First of all, as you can see here, it's been just climbing. This is 1 year. Let me show you the chart. And again, I love this because once I show you the constituents, you'll see why I like it so much. As you can see here, it's been moving straight up. It's consolidating right now, but I think it's going to give us another leg up. But if you look at the constituents, and I'll show you both the long part and the short part, take a look at what it's holding long. You've got Amazon, Baba, Overstock, Wayfair, Stamps, Etsy, Chewy, Grubhub, literally almost, not every company, but almost every company that I've talked about in the last couple of months. Remember this Pinduoduo? We've talked about Pinduoduo. We talked about JM. We've talked about Farfetched. We've talked about all of these companies. So you're able to buy them. Even Fiverr's in here, PetMed, Groupon's here. I would say almost every company that I see here I have talked about in the last few months. But here's where it gets interesting. You've got a short in brick and mortar. So if one sector goes up, you have exposure. If the other sector comes up, you've got exposure there too. So it gives you a little exposure to both. So look at the brick and mortar stores it has. All the stores that have been just doing terribly. American Eagle, Bed Bath, Big Lots, Dollar Tree, Dollar General actually has been doing well. Foot Locker. So it has all the traditional brick and mortars. And as you could see here, if you look at the profile, you'll see investment results compounds the performance of the ProShares long, online, short stores. So you get the online and you get the short stores. What could be better than that, right? You get a double whammy. The 1-year return, 73%. Not bad, right? Now the S&P, let's look at SPY. Just to give you some perspective. The SPY follows the S&P. 1-year return, 22%. All right. Here you've got 1-year return, 73%. 73%. And again, you have the best of both worlds. You've got the long online and you've got the short brick and mortar. Ticker symbol CLIX. So I believe this current economic cycle that we're seeing is going to continue for quite some time. Get yourself the best of both. Go long online and go short brick and mortar in one shot. Ticker symbol CLIX. When I saw this, I almost fell off my chair. I was like, they actually make this? This is so cool. And stick around next couple of weeks. I'll give you some more ETFs to trade that'll give you unique exposure, especially in the current market. And by the way, right now, the NASDAQ is really sizzling up. It's melting up. What I typically do is I start off a trend with individual stocks, then I'll move to ETFs, and then I'll move into cash. And that's another reason why I'm bringing this up right now. When the markets are a little vulnerable and due for a little switch, it's not a bad idea to rotate from individual stocks and into ETFs to give you a little less volatility and more diversification. And I got to say, I mean, look at this thing. Look at the constituents. I mean, think about it. You want to buy online? You want to bet on the online sellers? I mean, you've got Alibaba, Overstock, Wayfair. And on the brick and mortar side, you want to short brick and mortar? You've got it too. And remember, stocks go down a lot faster than they go up, which is why they created 100% long and 50% short, because you don't need that much short exposure. When things move down, they move down. But if you want to be long the retail sector and have a built-in hedge, CLIX, CLIX. Hope it helps. Folks, I can't stop thinking about former hedge fund insider Lance Ippolito's incredible trades. Really, these trades have gone up 350% in just the last 30 days. And you don't even have to risk a single penny of starting capital. That's almost quadruple your money in a month. And there's still time for you to get in on these trades. You see, there's one stock that just hit its $10 mark, and it's heading towards 20. Big players like Goldman Sachs, Citadel, Bank of America, and Citigroup are starting to pile in, meaning you need to get in now. Don't waste any time. Click on the link below to potentially earn 3.5 times your money in September. Do it now.